Good evening, students. So, how are you guys? So, today, students, we are starting a new chapter. We'll get an overview of this chapter. That is chapter number 8, Audit Report. So, students, as you already know, that process of audit finally ends in the form of expression of opinion by an auditor. So, the opinion is expressed through the medium of audit report. This you already know. We have been hearing this from the very first chapter. Okay. So this chapter basically deals with many essays. So what we shall do? We shall get a short overview of all essays. And this chapter also has provisions of Companies Act relating to audit report under section 143 of Companies Act. And in consequence of that, requirements of CARO 2020. So CARO 2020 is Companies Auditors Report Order. We shall be discussing in today itself in later part of this session. So students, we shall today be getting an overview of essay 700, essay 705, essay 706, essay 701, essay 710, essay 299 and essay 600. So before starting, I'll tell you what these essays deal with. So essay 700 deals with auditor's responsibility in forming an opinion and reporting on financial statements. And essay 705 contains requirements when modification to auditor's opinion is required. Essay 701 relates to auditors' responsibilities in communicating key audit matters in independent auditor's report. Essay 706 deals with auditors' responsibilities in relation to emphasis of matter paragraph and other matter paragraph. And essay 710 relates to auditors' responsibilities regarding comparative information. And essay 600 relates to using work of another auditor when, say, a company auditor use work of branch auditor or any other component auditor of audit of audit report of associate company. 79 deals with auditors' responsibilities in joint audit of financial statements. Okay. So these are all essays we shall be going to cover today. So students, tell me why, first of all, why there is need of an essay on audit report. So essay 700 deals with forming an opinion and reporting on financial statements. First of all, let us discuss why there is such a need. Why is there need for a standard on auditing, on audit report, on contents of audit report, on auditor's responsibility to form an opinion? Yes. Anyone who can tell? Yes, Malappa. Just apply your common sense. Why such an essay is needed? You would be wondering that auditor has performed procedures, he has obtained audit evidence. Now he should evaluate whatever audit evidence he has obtained, and on the basis of that he should give his audit report. Why there is need for a standard on auditing, on audit report, on expression of opinion, on forming an opinion? Why there is such a need? Yes, anyone? Yes, students, can anyone tell? Yes, students, I am waiting for your response. If any one of you, if any one of you can visualize, can imagine what is the need. Yes, Uni Krishnan, you are writing standardization of audit. Yes, that is on the right line. So when there is a standard on auditing in relation to forming an opinion, and the audit reports are issued in accordance with the requirements of such a standard on auditing, then it helps in ensuring comparability. It helps in promoting consistency. So you can understand, like users of financial statements say they are reading audit report of X company, and they are also reading audit report of Y company and of Z company. So they would find the information contained in audit report in a standardized format. So it promotes comparability. Users can compare the contents of audit report across the board. Okay. But it doesn't mean that audit report uh, process is mechanical. This standard on auditing SA 700, it provides considerable flexibility to the auditors in expressing their opinion, and in providing them a leeway to provide the necessary information which may be required. Okay. Yes, Union Krishnan, you are quite right. So you got my point, students. So SA 700 deals with the responsibility of auditor in expressing an opinion on the financial statements. So auditor's opinion, students, it can be of broadly of, it can be of two types. One is unmodified opinion and another is modified opinion. One is unmodified opinion and another is modified opinion. Now, modified opinion is again divided into further categories, but there are two main things, two broad heads: unmodified opinion and modified opinion. So when an auditor, on the basis of audit evidence obtained, has concluded that financial statements as a whole are free from material misstatements, he finds that there are no material misstatements in the financial statements. He has come to this conclusion on the basis of sufficient appropriate audit evidence obtained by him. Okay. So in such a case, he would issue unmodified opinion. In such a case, he would issue unmodified opinion, a sort of clean check to the company, that he has no reservation in stating that that the entity's accounts are prepared in all material respects in accordance with the applicable financial reporting framework, or they represent the financial statements represent a true and fair view. Okay. And modified opinion is given in the circumstance when the auditor concludes that financial statements as a whole are not free from material misstatements. Okay, so in that case he has certain reservations, so he would give his opinion in case he wants to modify his report according to the degree of reservation which he has concluded on the basis of audit evidence obtained. Yes, Unni Krishnan, you are asking after audit third party found out fraud, whether auditor liable for that. Say, you have to understand, if auditor can prove that he has carried out the work in accordance with standards on auditing, he has all the documentation in this regard, so he would not be liable. But if he can't prove that he carried out the work in accordance with standard on auditing, he didn't maintain professional skepticism, so in that case he would be liable. Okay, so there is no straight jacket formula. The auditor would have to show, that he did the work professionally in accordance with the standards on auditing. Okay, because we know that an audit doesn't provide absolute assurance. Yes, Unni Krishnan, is it clear to you? So SA 700 students also deals with contents of audit report. Contents of audit report. Now, it is not that the auditor can give the report in any manner, whatever he deems fit. So there are different headings which are prescribed in SA 700 according to which audit report is prepared and issued. Okay. So these are different headings according to which an audit report has to be given in accordance with SA 700. First thing is title. Title means that the audit report shall state at the beginning that it is independent auditor's report. Heading, it means heading. So this is the title, so that users can know that this is independent auditor's report. Then addressee. Addressee means the person or persons to whom the report is addressed. So like in case of company, the report is addressed to the members, and in case of other entities, to the persons who appointed them, like in case of a partnership firm, to the partners. And then it contains auditor's opinion. Now, then it contains auditor's opinion. Now here the auditor clearly states that he has audited the financial statements. He identified the financial statements, meaning he would identify that financial statements comprise of balance sheet, statement of profit and loss, or say cash flow. So and he also refers to the accompanying notes. and he also makes a mention of the period, for which period. So all the things are identified. This is stated in SA 700. Okay. And then he provides basis for the opinion. So first para, you have given opinion, then you would state basis for your opinion. Like say, if I have given an unmodified opinion, so I would say that I have performed the work in accordance with standards on auditing. I have obtained sufficient appropriate audit evidence. So such things are written in basis for opinion. Okay. Then comes going concern. This we have discussed last time in chapter 7, that if there is material uncertainty regarding certain events which may cause significant doubt on the entity's ability to continue as a going concern, then a separate para would be included. Okay. Then there are key audit matters. So key audit matters, for key audit matters, there is a separate SA also, SA 701. So for the time being, you can understand that key audit matters are certain important matters, certain significant matters which are stated by auditor in the audit report, and stating of key audit matters is mandatory in case of listed entities. For others, it is not mandatory, but in case of listed entities, it is mandatory. Okay. And then there is other information in accordance with SA 720, which is not in your syllabus. It is in final level. So other information means some information which is there in annual report. So auditor has responsibility to see that it is not inconsistent with the amounts and or disclosures made in the financial statements. Then there is, these are the standard points, responsibilities of financial statements. Yes, Unni Krishnan, this question on audit trail we will come later on when we shall be considering requirements of Companies Act in this regard. Okay. So responsibilities for financial statements, where the management would state, where it would be stated usual things that preparation of financial statements is responsibility of management. And there is a heading about auditor's responsibility for audit of financial statements, where auditor would state that his responsibility is to obtain reasonable assurance whether financial statements are free from material misstatements, that audit does not provide a guarantee that he is independent of the company. So all such things. That location of description of auditor's responsibilities. So sometimes it so happens that auditor's responsibility may not be included in main body of the report, or it would be included in separate appendix. Okay. So other reporting responsibilities, like responsibilities prescribed by law under legal and regulatory requirements, like responsibilities for reporting under Companies Act. And then there is signature of auditor, place and date of auditor's report. And after the auditor signs the audit report, he has to generate a unique documentation identification number, which is called as UDIN, on the UDIN portal of ICAI. So a number is generated which is linked with the membership number of the chartered accountant in practice who is signing the report. So this generation of UDIN is mandatory for every audit report and every certificate issued by a practicing chartered accountant. Okay. So students, I will show you audit report of a listed company. Like all these things which we have, which we are discussing right now, these you can correlate with the requirements of SA 700. Like say this is independent auditor's report. This is title. Okay. Then addressee to the members of company. Then there is opinion. So here the auditors have given a qualified opinion. Okay, so qualified opinion means modified opinion. It is a form of modified opinion as per SA 705. So we have, so the opinion para states that we have audited the accompanying standalone financial statements. So this is one part, that the auditors are stating that they have audited the accompanying standalone financial statements of the company which comprise the balance sheet. So they are identifying individual, um, financial statements which they have audited, like balance sheet as at 31st March 23. So period is written. Statement of profit and loss, the statement of cash flows, statement of changes in equity for the year then ended. So period is also stated. All individual um, things which form part of financial statements, these have been identified. They have identified the auditee client, and it also includes reference to significant accounting policies. Okay. So what do the auditors state? That in our opinion and to the best of our information and according to the explanation given to us, the aforesaid financial statements give the information required by the Companies Act in the manner so required, and they give a true and fair view in conformity with the Indian accounting standards. So this is a qualified opinion. So they are saying that financial statements give true and fair view subject to these things. Subject to these things. Okay, the effect of which they have provided. Okay, and after that, after opinion para, there is basis for qualified opinion, that why they are qualifying it. So we have read in SA 700 that below opinion para there is basis for opinion para. So remember students that even when unmodified opinion is given, basis for opinion is stated. Even in case of unmodified opinion, even when you are giving clean chit, even then you have to state basis for your opinion. You would be stating that we had carried out audit in accordance with standards on auditing. We have obtained sufficient appropriate audit evidence. So these kind of things. And in basis for qualified opinion, you would identify the matter on the basis of which you have given the qualification, and you would state the necessary information, state the effects, that why you are giving qualified opinion. Okay. Yes, Unni Krishnan, reasons have to be given in a manner for qualification so that users can know their effects. Okay. So like in this case, whatever the matter the auditors have identified, So they have given a complete para in regard to it. Okay. Complete, there are complete 2-3 paras. And then there is emphasis of matter paragraph. So emphasis of matter paragraph, again there is a separate essay on it, essay 705. So for the time being, you can understand that there are certain matters which are being emphasized by the auditor. We shall come to emphasis paragraph. Sorry, it is not essay 05, essay 06. So emphasis of matter paragraph, we shall come to it later. And then there are key audit matters, which is as per requirement of essay 701. Yes, financial impact has also to be given, Unikrishnan. So these are key audit matters. And then information, other information, again responsibilities of management, responsibilities of auditor. So all these things and other matters, other matter paragraph, and report on other legal and regulatory requirements. Now this is required as per Companies Act. This is the requirement of Companies Act 2013. Companies Act 2013 specifically mandates a statutory auditor of a company to report on these lines. Okay, so these points you have also read under section 143 subsection 3 in Companies Act. So these are the same point which you have read in your company law classes. Okay. So this is the kind of report, students, which is issued by a statutory auditor. So I hope that you have got a understanding, an overview of how an audit report looks like, and you can correlate it to what are the requirements of SA 700. Okay. Now, students, we had uh, we had understood that auditor can modify the opinion if he has concluded that financial statements as a whole are not free from from material misstatements, or if he is unable to obtain sufficient appropriate audit evidence to conclude that financial statements as a whole are free from material misstatements. So in both cases, he can issue a modified opinion. So modified opinion is of 3 types. Number 1, qualified opinion. Number 2, adverse opinion. And number 3, disclaimer of opinion. Yes, you have to remember elements of audit report. You have to remember the various headings, what is included in audit report as per SA 700. So qualified opinion, adverse opinion, and disclaimer of opinion. These are 3 types of modifications, 3 types of modified opinions. So basically, you can understand, students, in general language, in common language, that in modified opinion, the auditor doesn't give a clean chit to the company. So he has certain, as I've told you, he has certain reservations. Like, and the meaning of these opinions changes according to the degree of reservations the auditor has. Like, in case of qualified opinion, the auditor is saying, is trying to convey that overall financial statements are fine, but except for few things for which he is stating their effects. He is quantifying their effects. But subject to this, financial statements give a true and fair view. Okay. And adverse opinion means when, in general language, you can say the auditor states that impact is all pervading. So he doesn't he states that financial statements do not give a true and fair view. And disclaimer of opinion, when the auditor disclaims his opinion that he is unable to obtain audit evidence on which to base opinion, to state that financial statements are free from material misstatements. He is unable to obtain such opinion. Okay. So in this context, in the context of modification of opinion, SA 705 uses a term pervasive. Now, what is the meaning of this term pervasive? Yes, anyone? So just tell me, what is the literal meaning of that word pervasive? What is the literal meaning of the word pervasive? Then we come to know what is stated in SA 705 in relation to it. Now, yes, Unni Krishnan, if the auditor has issued adverse opinion, then obviously those financial statements would be submitted to regulatory authorities. These would be filed on MCA portal. He has no responsibility to separately inform. He has responsibility separately to inform in case of fraud under section 143 subsection 12. If amount involved is 1 CR or more. Yes, what is the meaning of pervasive? No, pervasive meaning is not assumptions. Yes, anyone? Any student who can tell what is the meaning of pervasive? Not conditions prescribed in SA 705. I am just asking you the literal meaning of the word pervasive. What does it mean? When we say something is pervasive, what does it mean? Yes, none. Yes, Sumit. Yes, you are right. Present in all. Yes, it is near to that. So pervasive means all pervading. Okay, like it is not confined to one thing. It is all pervading, like some disease has pervaded many parts. So we say it is pervasive. So similarly, in the context of misstatements, we say that pervasive effects on the financial statements are those that in auditor's judgment are not confined to specific elements, accounts, or items of financial statements. That its effect is not limited. It is affecting many things. Like say there is misstatement in sales, then sales are misstated. It is also impacting profits. It is also impacting debtors. It is also impacting inventories. Okay. So pervasive effects on financial statements are those that in the auditor's judgment are not confined to specific elements, accounts, or items of financial statements, or even if so confined, it could be possible that some item is confined to one amount, to one financial statement amount, but it forms substantial portion of the financial statements. Like say if inventories are materially misstated, but they form substantial part of the assets, so that would also be pervasive. In relation to disclosures, they are fundamental to the user's understanding of financial statements. So this definition is very important, students, from your examination point of view. And the meaning of different type of modified opinions is also very important. So you have to be clear in your minds about what does a qualified opinion mean, what does an adverse opinion mean, and what is the meaning of disclaimer of opinion. Okay. And you have to remember this definition of pervasive, because why this definition is important? Because the term pervasive has been used to define the different type of modified opinions in SA 705. That is the importance, that is the significance of this term. Okay, so unless you can you are not able to understand this term pervasive, you would not be able to understand the meaning of different types of modified opinions. And one more important thing, students, remember that pervasive is a term used in the context of misstatements to describe the effects on financial statements of misstatements or possible effects on the financial statements of misstatements if they are undetected. So now see, students, try to understand what is a qualified opinion. So qualified opinion is when the auditor has obtained audit evidence, but the auditor concludes that misstatements are material but not pervasive. Misstatements are material but not pervasive. So obviously you can very well understand, students, that only those misstatements may be relevant to the auditor which are material. So if he finds that there are misstatements which are material, however, these are not pervasive, so their effect is limited to some item of financial statements, to some amount, so the auditor issues a qualified opinion. Clear? Material but not pervasive. And adverse opinion, when auditor obtains audit evidence and he concludes that misstatements are both material and pervasive, either individually or in aggregate with others. They are both material and pervasive. Yes, Only Christian, you are correct. It means that having a wider effect on financial statements. Yes, you have got it right. So, but for the examination point of view, students, you have to remember the definition of pervasive. All the three things. Many times questions have come on this, and you have also to remember the technical definition of qualified opinion, adverse opinion, and disclaimer of opinion. Simple, just understanding won't do. For writing in the exam, you would have to write these technical definitions. You have to learn these. Okay. And disclaimer of opinion, the auditor shall disclaim an opinion when he is unable to obtain. Now, he is unable to obtain sufficient appropriate evidence, and he concludes that possible effects, that their probable effects could be both material and pervasive. So, students, you see that what is the, again I am asking you, what is the literal meaning of disclaimer? So in books also you see na disclaimer, while seeing TV serials, while seeing a picture, you also see something written with the heading disclaimer, that this story is not based upon real life characters, these type of things. So disclaimer means they disown. So disclaimer means that they disown. So here the auditor also disowns, that he states, look, I am not in a position to express my opinion because I have not found sufficient appropriate audit evidence on which to base my opinion. Okay. And yes, Unicretion, you are saying pervasive effect only on adverse opinion. It is in adverse as well as in disclaimer of opinion, but it is not there in qualified opinion. Qualified means a little smaller degree. So qualification, that I am saying everything is okay, but with a little qualifying effect. Okay. Clear, guys? So you have to learn the meaning of qualified opinion, adverse opinion, and disclaimer of opinion. And say, students, when an auditor expresses modified opinion, meaning when he either expresses qualified opinion or adverse opinion or disclaimer of opinion, then accordingly basis of opinion paragraph would also change. Then basis of opinion paragraph would also change. Like in this audit report which I had shared with you, so the basis for opinion paragraph has been changed and its heading is also changed. So you see here, you have noticed the heading is also changed. Now heading is basis for qualified opinion. It is not basis for opinion. When the auditor gives unmodified opinion, here the word would be written opinion. Okay. And here it would be written basis for opinion. Now here it is written basis for qualified opinion. So if the auditor gives adverse opinion, then here it would be written basis for adverse opinion. And similar in case of disclaimer. Clear? So students, if said after auditor has accepted an engagement, he has he is in the process of conducting the audit, say, but management doesn't cooperate. It doesn't allow him to, say, for example, to send external confirmation, or it doesn't provide him the necessary documents or or papers which he has required. So what are the options available to the auditor? So again, if he thinks that, if he concludes that effects of material misstatements could be material but not pervasive, then he can issue a qualified opinion. But if he thinks that effects are material and pervasive, then he would issue disclaimer of opinion, or he can also withdraw from the engagement if he is allowed under the law or regulation to do so. Yes, Unnikrishnan, it is necessary to obtain confirmation. External confirmations are mandatory as per SA 505. Now, how many confirmations he takes, whatever is sample size, that depends upon his judgment. Yes, first of all, he would request, obviously, first of all, he would request management to remove such restrictions. But if the management doesn't remove such restrictions, like of those we are talking about, like the management is not allowing him to send the confirmations, so it would act as a limitation on scope of the audit work itself. It would act as a limitation on the scope of audit work itself. Clear, guys? So basic thing is clear to you, and as I have told you, this term pervasive is very important from examination point of view. No, only Christian, you are writing creditor will give unanimous figures in the last moment, reconciliation not possible. Now it is for the auditor to see to seek all the information in time, and that it is proper and correct. It depends upon case to case. There is no straight jacket formula for this. So this I already told you, when auditor gives modified opinion, then headings also change. Yes, if you want to ask something in Hindi, then you can ask me when you would be unmuted on Zoom. Okay. So qualified, like when an auditor gives qualified opinion, so heading would change, qualified opinion. So, and the wording also gets changed. It would be when the auditor expresses a qualified opinion due to material misstatements, the auditor shall state that in auditor opinions, except for the effects of matter described in basis for qualified opinion section, except for those matters. Now let us see in the example in the audit report whether such wording is used. What is the wording? Except for the effects of matter described in the basis for qualified opinion. Now what is used here? Look, except for the possible effects of matters described in basis for qualified opinion section. Okay, so it is in accordance with the requirements of SA 705. Similarly, when the auditor gives adverse opinion, the auditor shall state that in the auditor's opinion, because of the significance of matters described in the basis for adverse opinion section. And the wording would also change. He would clearly state that financial statements do not present fairly. These are not prepared fairly in accordance with the applicable financial reporting framework, or these do not give a true and fair view. Okay. Similarly, in case of disclaimer of opinion, so when the auditor disclaims the opinion, then the wordings totally change. The wording changes altogether. So he would state that the auditor doesn't express an opinion on the accompanying financial statements because he is disclaiming. Then how he would say that he has expressed opinion? So obviously he would write, he would state that auditor doesn't express an opinion on the accompanying financial statements, and state that because of significance of matters described in the basis for disclaimer of opinion, auditor has not been able to obtain sufficient appropriate audit evidence. Yes, Unni Krishnan, this way I do not remember at present, but regulatory authorities do take actions. Regulatory authorities do take actions. They may start their own investigations. Okay. Like SEBI may start investigations like that. So amend the statement required by SA 700, which indicates that financial statements have been audited. So that is very important. So in case of disclaimer of opinion, the auditor wouldn't state that we have audited the accompanying financial statement. He would change the line to convey that he was engaged to audit the financial statements. Now, why this has been changed? Because he has not been able to obtain sufficient appropriate audit evidence. If he writes that he has audited, then it would convey a false, it would convey a misleading meaning. Okay. So this was an overview of SA 705, modification of opinion in auditor's report, and I am giving you again a brief overview of what we have read till now. SA 700 deals with auditor's responsibility of expressing opinion and reporting on financial statements. It states that unmodified opinion is to be given if the auditor concludes that financial statements as a whole are free from material misstatements. In opposite case, modified opinion has to be given. And SA 700 also deals with the contents of audit report. What is to be included in auditor's report, like title, like addressee, like opinion para, like basis for opinion para, like going concern para, like key audit matters para, like management's responsibilities, auditor's responsibilities, responsibilities on other information, and responsibility under law or regulations, and place, signature, and date. These are also there. And UDIN is also created, unique document identification number. Now this requirement was made mandatory about 4 or 5 years back. So because some people were misrepresenting themselves as chartered accountants. So what happens when you create UDIN? You go to portal, and when you feed the required particulars of the audited financial statements, it has 3-4 particulars, like turnover, like say there are 2-3 other metrics which are to be fed into the system, and the system sends an OTP to the mobile number of the member who has signed the audit report, and then a alphanumeric number is generated, which is called as UDIN, unique documentation identification number, because it is unique in itself. It is unique in itself. Okay. Clear, guys? So now we come to SA 706. SA 706, students, deals with two things. It deals with two things. It deals with emphasis of matter paragraph, which I am writing for short as EUM. Okay. And other matter paragraphs. Now, what are these things? Emphasis. Now, these two things are separate. These are separate requirements. Emphasis of matter paragraph and other matter paragraph. Now, emphasis of matter paragraph. So, in short, I would call it as EUM in short. Okay. So, EUM paragraph draws attention of users to a matter already included in financial statements or already presented in financial statements, and the auditor thinks that it is necessary to state it in the emphasis of matter paragraph because it is fundamental to users understanding of financial statements. Like say fire has occurred in the damaging say some plant or inventories, so the matter is already disclosed in notes to accounts. Okay, but still in the audit report the auditor wants to draw users attention to this matter, so such matters are stated under the heading emphasis of matter paragraph. Clear, students? So important condition for a matter to be stated in EOM paragraph is that it should be already disclosed or presented in financial statements. If such a matter is not already presented or disclosed in financial statements, then it can't be shown in emphasis of matter paragraph. Clear? And it should be fundamental to the user's understanding of financial statements. And there is another thing, another nomenclature, that is other matter paragraph. That is other matter paragraph. Now, what is other matter paragraph? So in short, I am writing it as OM. Other matter paragraph. So other matter paragraph is a matter which is not presented or disclosed in financial statements. And the auditor thinks that it is relevant to users' understanding of audit, auditor's responsibilities, or auditor's report. So such a matter is concerned with audit. Whereas EOM paragraph relates to fundamental understanding of financial statements pertaining to users. However, other matter paragraph relates to users understanding of those matters which are relevant to auditor's responsibilities or audit report. Like say the auditor states that that audit of so many branches was not done by him, that he has relied on the reports of the branch auditors. So such a thing is stated in other matter paragraph because it relates to users understanding of auditors responsibilities. Okay, clear guys? So you understand the difference, distinction between EOM paragraph and other matter paragraphs. Now let us see in our example whether EOM para is there. Yes, emphasis of matter paragraph is there. Okay, so whatever matter is stated, so just read the line, students. Emphasis of matter paragraph. No, it is not used to modify the report only, Krishnan. I am coming to that. So emphasis of matter paragraph, we draw attention to note this much of financial statements which describes the matter relating to some, it describes certain matters. Okay, so this matter is already disclosed in financial statements under this note. Okay, so remember again that emphasis of matter paragraph is used to refer only to those matters which are presented or disclosed in financial statements and which are relevant to users' understanding of financial statements. Whereas other matter paragraph relates to matters other than those presented or disclosed in financial statements, which are relevant to users' understanding of audit, auditor's responsibility, or audit report. So let us see whether in this case other matter paragraph is also there. Yes, other matter paragraph is there. So we are not statutory auditor of these companies of our. So this matter relates to auditor's responsibilities. Which they have stated in other matter paragraph. So this information is not disclosed in financial statements. Okay. So you have to remember the definition of EOM paragraph. You have to remember the definition of other matter paragraph. And SA 706 also states that if the auditor considers it necessary to draw users' attention to matter. So one more thing, guys, remember that it is necessary. It is not necessary to include an EOM paragraph. It is not necessary. It depends upon the auditor's judgment whether he wants to include EOM paragraph or not. Yes, you need to learn objectives as per SA 706 on page 8.48. Yes, if a company has not followed useful life, it can follow other, as per schedule 2, it can follow useful life other than what is prescribed in Companies Act 2013 under schedule 2, but it has to state the reasons therefore. It wouldn't fall under other matter paragraph. Such a thing won't fall under other matter paragraph. The company, if has to simply state this fact and make a disclosure. Okay, if it hasn't made a disclosure, then the auditor would ask the company to make a disclosure because it is required by law. So it would be material. Okay. So if the auditor considers it necessary to draw users' attention to a matter presented or disclosed in financial statements, then in auditor's judgment is of such importance that it is of fundamental to users' understanding of FS, the auditor shall include an EOM paragraph in the auditor's report, provided. Now, what is provided? That the auditor would not be required to modify the opinion. Now, that is very important, guys. If the matter is such that it requires modification of opinion, then the auditor cannot escape his responsibility by simply putting it in the EOM paragraph. That look, I have stated it in EOM paragraph. No, he can't do it so. If modification of opinion is required, then modification has to be done. EOM paragraph is not a substitute for modification of opinion, guys. This is very, very important. I think schedule 2 only requires to make a disclosure that why they have taken this life. This much disclosure is required. You can check it from schedule 2. It is there in the notes. I don't think financial impact would be required. Yes. So whenever EOM paragraph is included, then there is a separate section of EOM paragraph. Like in our audit report, which we have seen, there is a separate heading. There is a separate heading which clearly shows to the users that emphasis of matter paragraph is there. It is there in the bold. And in the paragraph, that matter is described by referring to the notes on financial statements. And it also indicates that auditor's opinion is not modified in respect of the matter emphasized. So let us see whether the auditors have written this. Look, the auditors have written here, our opinion is not modified in respect of this matter. Followed all the requirements of SS 706. Clear, guys? So they have described some matter which is there in the financial statements. They have included it in EOM paragraph, and at the end they are writing that our opinion is not modified in respect of above matter. So some examples are given in relation to EOM paragraph, like an uncertainty relating to the future outcome of some litigation, a significant subsequent event that occurs between the date of financial statements and date of auditor's report. So like that. So all these 3 points are also very important, students, which I have already told you that EOM para is not a substitute for modified opinion. And it is also not a substitute for disclosure in the financial statements, which the management is required to make. So the management can't say tomorrow that, look, auditor has stated this in EOM paragraph, but there was no responsibility on our part. First thing would be that if the matter is not disclosed in the FS, then auditor can't state it in EOM paragraph. So I am talking about a hypothetical situation. Yes, Onni Krishnan, you are asking first qualification given, then how we can say that report not modified? What you are trying to say, I am unable to understand. When we qualify the report, then the report is modified. When we give a qualification, it means that the report is modified. If you are talking about useful life, then that is a disclosure. That is not a qualification. Okay. And reporting and while studying about SA 570, we had also discussed that management has to make certain disclosures regarding significant events or conditions that make us significant doubt on entity's ability to continue as a going concern. So this is EOM paragraph is not a substitute for all these things. So what they are trying to tell you, that the purpose of this is only to highlight a matter in the auditor's report which is already included or presented in the financial statements. Okay. The purpose is to just highlight the matter. If you were required to modify the opinion, then you would modify the opinion. You can't put it in EOM paragraph. Okay. Now, only Krishnan, the auditors here, probably you are talking of this report. The auditors have modified the report, modified the opinion as a whole. But for this matter, which they have included in EOM paragraph, they are stating that our opinion is not modified in respect of this matter, not for the financial statements as a whole. For financial statements as a whole, they have issued qualified opinion. But for this matter which they have highlighted, which is already there in the financial statements, they are stating that our opinion is not modified in respect of this matter. For qualification, they are stating something else. For the point for which they have qualified, that matter is something else. And for EOM paragraph, they are stating something else. Yes. So other matter paragraph SA 706 states that other matter paragraph is also to be included in a separate section. Okay. So when the auditor includes an other matter paragraph in the auditor's report, the auditor shall include the paragraph within a separate section with the heading other matter or other appropriate heading. This we have already seen in this example, in this audit report. Okay. And now students, there is another essay, essay 701. SA 701. Now it relates to communicating key audit matters in independent auditor's report. Now, which we, in short, we can call it as CAM, key audit matters. Now, what are key audit matters? And what is the purpose of stating key audit matters in the auditor's report? Yes, anyone? Yes, come on, guys. Can anyone tell what could be the purpose of stating key audit matters in the auditor's report? Yes, students, come on. Yes. What is the purpose? What could be the logic behind stating key audit matters in the auditor's report? Yes, come on, guys. None. So if the auditor states key audit matters, that then it enhances communicative value of the report. It increases communicative value of the report. So first of all, we understand what is the meaning of key audit matters. So key audit matters are those matters which the auditor during the course of audit has identified to be the significant matters, important matters, and these are selected from those matters which have been communicated with management, which have been communicated with those charged with the governance. So like say, for example, while auditing, the auditors have identified risk. Auditors have identified revenue recognition as an important area. Okay, so they have identified that there could be risks in revenue recognition, that there could be misstatements in revenue recognition, whether proper standards on whether proper accounting standards in this regard have been followed or not. So they have designed their procedures in this regard. Okay, they designed their procedures, they obtained sufficient appropriate audit evidence, they designed their procedures in such a manner to detect material misstatements. They verified that necessary accounting standard has been followed, requirements of necessary accounting standards have been followed. They also verified various assertions relating to completeness, cutoff, occurrence. So I'm just giving you an example. Now, while forming their opinion, when they are in the process of issuing audit report, so they have decided to include this matter as a key audit matter. And they want to show to the users of financial statements, like, look, that we had identified this area as an important matter during the course of audit, and we performed these procedures in relation to such an important area. So such areas could be 1, 2, 3, not 15 or 20, because otherwise the significance of key audit matters would itself be lost. So normally auditor identifies of the during the whole audit, say 4 or 5 matters or 2 or 3 matters which are of the utmost significance to him during the course of audit. So they would state those matters in audit report, and they would also state how they dealt with those matters. Okay. So remember that key audit matters are mandatorily required to be disclosed by the statutory auditor in case of listed entities. For unlisted entities, it is not mandatory. If the auditor, in his professional judgment, requires such matters to be stated, he can state. Otherwise, these are not mandatory. Okay. So in this report, we see whether certain key audit matters are there. Yes. So key audit matters are there. So first of all, auditors describe what are the key audit matters. Then they have identified those key audit matters, and they have also given auditor's response. Now, key audit matter description and auditor's response. So remember, guys, at the beginning of this chapter, while understanding the overview of the chapter, we had talked about that while SA 700 provides a benchmark for comparability and uniformity, but it also provides flexibility to the auditor in providing certain information. So you can state that key audit matters are a route to provide such information, to provide such flexibility. Okay. So the auditors have written that these are the procedures performed by them in respect of the matters identified. So in this case, the auditors have identified this key audit matter. Okay. So again, guys, yes, Unnikrishnan, key audit matters are different from other matters. These are different from EOM paragraphs also, because now we make a distinction, quick distinction. What is the difference between EOM, other matter paragraph, and key audit matters? EOM versus OM versus CAM. Now let us do a quick analysis. Now what is the difference? Now EOM matters are also significant matters, but these are already presented or disclosed in financial statements, and the auditor doesn't provide detail of his procedures, detail of responses which he performed in relation to that matter. He just highlights that matter which is already described in the financial statements. So matter is already there, but he highlights it, simply stating all those things which are there in the FS by referring to by making proper reference to the notes in the FS. But in CAM, in key audit matters, the auditor not only identifies those matters, but also gives his own version of how he, as an auditor, responded to those important matters. Okay. And other meta paragraph, you already know that although these are not disclosed or presented in financial statements, these relate to auditor's responsibility, audit, users' understanding of audit, and auditor's report. So clear, guys, distinction between all the three. So key audit matters are those matters that in the auditor's professional judgment were of most significance in the audit of financial statements of current period. And key audit matters are selected from matters communicated with those charged with governance. So what is the logic behind it? So obviously, if something is significant during the course of audit, so auditors must have communicated those significant matters with those charged with governance, probably in accordance with SA 260. Okay. So purpose of communicating key audit matters, I have already told you. So determining key audit matters. So from which areas key audit matters are determined? Generally areas of higher assessed risks of material misstatements, or where significant accounting estimates are involved. Such things, like I had given you the example of revenue recognition. So in that case, the auditors have assessed the risk of material misstatements in case of revenue recognition to be high, or where the management, the company has made some significant estimates. So how auditors responded to verifying those estimates? Okay, these all things, from these areas generally key audit matters are identified, but there could be other areas also. So illustrative areas are given in SA 701. Okay. And all these things are also very important. Very important, that key audit matters are not a substitute for disclosure in financial statements. Again, if management is required to make disclosure in accordance with applicable financial reporting framework, then it has to make disclosures. Management can't hide under the excuse that this matter is described in key audit matters in the auditor's report. Okay. And again, like in EOM paragraph, key audit matter para is not a substitute for auditor expressing a modified opinion. So when modified opinion has to be expressed, then the auditor has to express the modified opinion. He can't take refuge under key audit matter paragraph, that I have stated this in key audit matter paragraph. If he was required to modify his opinion in accordance with SA 705, then he would necessarily be required to modify his opinion. And it is, key audit matter paragraph is also not a substitute for reporting under 570, SA 570, similar to the requirement in EOM. And one more thing, key audit matter para is not a separate opinion on individual matters. So guys, this is also very important. You have to understand that when something is stated by the auditor in key audit matters, then auditor doesn't express separate opinion on these matters. Opinion is something which he is expressing for financial statements as a whole. Okay. So somebody can't say that, look, you have written this in key audit matter paragraph, some important matter as a key audit matter, and we take it as your opinion on this described matter. It is not an opinion on the described matter. It is just that the auditor has identified certain matter as a significant matter which he encountered during the course of audit, and he is stating this matter as a key audit matter, and he is also stating how he responded to that key audit matter during the course of audit, which kind of procedures he performed in response to the identified key audit matter. And as I have already told you, this communication of key audit matter paragraph is mandatory in case of listed entities. So in case of audit report of a listed entity, you would always find a key audit matter paragraph. This is the key audit matter paragraph, key audit matters description, and auditor's response. Okay. These are again the summaries. So there is another essay, guys, essay 710. Quick overview we shall take. Rest you can read from your module and from the previous lectures. So essay 701 relates to comparative information. So what is comparative information? Yes, anyone, what is comparative information? Yes, Unni Krishnan. Look, you have to understand it that way, that key audit matter is not resolved by the management. Say the auditors have identified certain issues. They have designed the procedures, and they have found nothing unusual. They have not found any misstatement. So the auditor in his wisdom has decided to include it as a key audit matter. Okay, it has nothing to do with the resolution. And if something is so important which is not resolved, then obviously the auditor would have to modify his opinion. Then how key audit, how it can be included in key audit matter paragraph? Your query itself answers your question. Yes, is it clear to you? Yes, students, can you tell what is the meaning of comparative information? Yes, anyone? Yes, guys. No, it has nothing to do with the future. It is just to make uh, to communicate to the users of financial statements, like, look, that we had identified this matter as a key audit matter during the course of audit, and we are stating it in our audit report. We are also stating it that what procedures we performed. It has nothing to do with the future. Yes, yes. Previous figure comparison. Yes, you are right. Onni Krishnan. Yes. So comparative information is of two types, students. One is corresponding figures and one is comparative financial statements. Now, what is corresponding figures? Corresponding figures in when along with the current year figures, prior period figures are given. Like in case of companies, Schedule 3 requires a company to give current period figures and prior period figures. So, example of corresponding figures. In case of corresponding figures, the auditor gives opinion on the current period's financial statements only, but corresponding figures are also included. So he doesn't give an opinion on the corresponding figures. Whereas in case of comparative financial statements, the auditor gives opinion on both. Okay. So what are the responsibilities? There are audit procedures, usual audit procedures. The auditor has to see that comparative information agrees with the amounts and disclosures presented in the prior period. The accounting policies followed in comparative information in prior period are consistent with the current period. And first of all, he would see whether the financial statements include the comparative information required by the applicable financial reporting framework. Okay. So then there are certain matters that if the when corresponding figures are presented and say if the auditor's report on the previous period includes qualified opinion, adverse opinion or disclaimer of opinion, then auditor would obviously see whether that misstatement on basis of which opinion was modified last year, whether that misstatement is still persisting. So there are responsibilities pertaining to that. Okay. So similarly, in case of comparative financial statements. Now there is a concept of students joint audit. Yes. Essay 299 deals with the concept of joint audit. Yes. What is joint audit? Yes. Anybody? What is your understanding of joint audit? Yes, students. What is your understanding of joint audit? Yes. Anyone? Sumit? Uni Krishnan? Yes, audit done together with by more than one auditor. Yes, for the same company. Yes, yes, for the same entity. Yes, you are right. So what could be the possible benefits of joint audit and what could be the possible disadvantages? So possible benefits are sharing of expertise, mutual consultation, okay, and say in case of large companies the area of work can be divided, and disadvantages could be coordination problems, differences in opinion. So all these things are there. So essay 299 deals with the responsibilities of joint auditors. So when a joint audit is conducted, when joint auditors are appointed, then students tell me what about audit planning? whether audit plan and audit strategy, whether it would need to be devised individually, or it would be a common audit plan and audit strategy. Yes. And what about engagement letter? And what about management representations? Just make guess. Make guess with logic. Yes, all common. Yes, audit strategy and audit planning has to be common because it relates to audit as a whole. And what about engagement letter and management representations, written representations? These have also to be common. But when a joint audit is conducted, auditors allocate their work. They divide their work. Okay. They divide their work. So when they divide their work, students, they are responsible for the work allocated to them. Like say a bank has appointed 4 joint auditors. Now the auditors have divided their work between themselves. Like I would be looking after advances, I would be looking after deposits. So they would be responsible for the works allocated between themselves. And although they are required to issue a common audit report, but there can be circumstances where a joint auditor has difference of opinion with other joint auditor. Then in such a case, he shall issue a separate report, and other auditors shall also give reference to his report in their report. So these are basic elementary requirements of SA 299. So first is the engagement partner and other key members of engagement team from each of the joint auditors should be involved in planning the audit. The joint auditors should jointly establish an overall audit strategy which sets the scope, timing, and direction of audit. Okay, so they can give their inputs. Yes, allocation of work is done in writing. So before the commencement of audit, the joint auditors should develop a joint audit plan. Okay, because planning relates to the whole of audit, strategy relates to the whole of audit. So all the joint auditors sit together and they develop a joint audit strategy and joint audit plan, and they identify the division of audit areas and common audit areas. So there can be, students, such areas where work cannot be divided. Like say I am taking the example of a bank. So like IT areas, IT infrastructure, IT information systems. So it is a common area. So the work may not be divided. So ascertain the reporting objectives of the engagement. Consider and communicate among all joint auditors the factors that are engaging in team's efforts. That is again pertaining to audit strategy. Okay. So the basic thing is that you have to divide the audit areas and identify the common areas. So each of the joint auditors should consider and assess the risk of material misstatement and communicate to the other joint auditors. Okay, say like I am checking area of revenues. So I would identify a risk of material misstatement in respect of revenues, and I, I, I would share my assessment with other joint auditors. Okay. So the joint auditors should discuss and document the nature, timing, and extent of audit procedures for common and specific allotted areas. The joint auditor should obtain common engagement letter and common management representation. The work allocation document should be signed by all joint auditors. So Onni Krishnan, this answers your query also. So a work allocation paper, a document is prepared where they agree to divide work, to allocate the work between themselves. Okay. And very important, students, and this part is very important. Now, responsibility of joint auditors, that in respect of audit work divided among joint auditors, each joint auditor is responsible only for the work allocated to such joint auditor. So when I have some work has been allocated to me, so I would be responsible only for that work. But for common areas, all are jointly responsible. Okay. So the audit work which is not divided among the joint auditor and is carried on by all joint auditors, the joint auditors shall be jointly and severally responsible. They shall be jointly and individually responsible. Okay. Joint auditors are required to issue common audit report. No, Pranjali, where is why you are talking about internal auditor? Joint auditor is not internal auditor. Here we are referring to, we are talking about statutory auditors, external auditors. No, there is no concept of, you shouldn't relate it to the internal auditor. Okay. However, where the joint auditors are in disagreement with regard to the opinion in respect of any matters to be covered by the audit report, they shall express their opinion in separate audit report. Yes, there can be some areas, you are writing correctly, Unikrishnan. Yeah, there can be some areas which can't be divided. So these would always be common areas. Like say, take the example of banks. Now the work can be divided on the basis of geography. Like if I am an auditor of a bank, so one auditor would look after the, say, whole of the areas of the northern region. One would be looking after whole of the areas of the, or some of the areas of southern region. Okay. But some division of work is definitely possible. Although it is not possible to divide and allocate every work, but it is possible to divide and allocate substantial works. Yes. There is another reference to SA 600 in your module. It is not in detail. Complete SA 600 is not there. Only just reference is there. So you have to understand this much only about SA 600. Yes, Pranjali, I have already told you that just see the responsibility area. in respect of audit work divided among joint auditors, each auditor is responsible for the work allocated to such joint auditor. So if there are 5 auditors, they have divided work among themselves. So they would be responsible for the work performed by them. But for the common areas which have not been divided, obviously in an audit, there would be certain common areas which can't be divided. So they would be jointly and severally responsible for those common areas. Okay. Like they would be jointly responsible for planning. Or they would be jointly responsible for any unallocated audit work. Yes. Yes, if the matter reaches uh, courts, then obviously courts have to take decision. So SA 600 students using the work of another auditor. It states that the main auditor, which we call in SA 600 as principal auditor, he has a right to visit a component and examine the books of accounts. So say, take an example that a company has 5 branches. It has also appointed a company auditor, and it has also appointed a branch auditor for auditing 5 branches. So both are auditors in their own rights. So this thing you have to remember, that a principal auditor has a right to visit the branches. It has a right to visit a component whose financial information is going to be included in the financial statements. Yes, they can give a different opinion. I have already covered this aspect. Paranjali, I have already covered. They can give a different opinion, but other auditors would have to give in their reports cross reference to the report of dissenting auditor. Okay. So where another auditor has been appointed for the component, the principal auditor would normally rely on the work performed by the branch auditor or by the component auditor. But he can also examine the records of the branch, or he can advise the auditor that, look, I want to make use of such procedures, so you please take it into consideration. Or he can advise component auditor of any significant accounting, auditing and reporting requirements which he thinks necessary for the audit as a whole, because it is he who the principal auditor who is required to sign on the financial statements of the company as a whole. Okay. So it is logical that he can have access to the branch office, he can examine the accounts, and he can normally he relies on the work of say component auditor, but he can give necessary advice in respect of certain matters to component auditors. Okay. Yes, say if the branch auditor has given a clean opinion, but the company auditor is not in agreement with him. So obviously the financial statements of branch, the financial information of branch is to be included in the financial statements of the company. So the auditor would see how material it is, what is the impact on overall opinion. Okay, like say I give you example of bank head office and bank branches. Say branch auditor, some branch auditor has made certain qualification, but that qualification may not be material from the point of view of the bank as a whole, or the principal auditor may refuse to take into consideration that qualification, because he may have a different opinion, or he can take into account also and see what effect does it have on the financial statements as a whole at overall level. Okay, so students, as you have read in your company law classes, that there are reporting requirements under section 143(3). So you have to remember all these reporting requirements, because these have to be stated by the auditor in his audit report. You have already done this in your company law. Okay, so he has to state whether he has sought and obtained all the information and explanations. Now these are statutory requirements, and these have to be reported as such, because these are provided under law. These are responsibility of the company auditor under the Companies Act 2013. Okay, so whether in his opinion proper books of accounts as required by the law have been kept by the company. So on the similar pattern, whether the report on the accounts of branch office audited by branch auditor has been sent to him, whether the company's balance sheet and P&L are in agreement with books of accounts, whether financial statements comply with the accounting standards. So all these things you have already covered in your company law. So now let us look at this example. So before we see the example, tell me guys, under which heading such reporting is required in the audit report. Now we have discussed it at the beginning when we started SA 700. Under which heading it would be reported? All these requirements which are required under the company law, under which heading these would be reported? No, question won't come in this way, that write requirements of 143(3), all requirements. You would be specifically asked about one two points only. Generally such long questions do not come in CA exams, because your paper is structured in such a way that each question is of 4 marks or of 3 marks in descriptive type. So obviously you have to write either 1 para or 2-3 paras. That's the most. Yes. Yes, students, I have asked from you whether you remember under which heading such requirements would be stated in the auditor's report. Reporting requirements under Companies Act. So we have read contents of audit report na today under SA 700. No, these are not Caro requirements. Caro would come later on. I am just asking about reporting requirements under 143.3. What would be the heading? Just plain common sense, students. Yes. Anyone? Yes, Soni Krishnan. Paranjali. Yes. Other reporting responsibilities. What kind of reporting responsibilities? So this would be the heading. Report on other legal and regulatory requirements. These are legal requirements. These are legal and regulatory requirements. So all the Companies Act 2013 requirements which are there in 143.3 and Caro reporting, these are all included in under the heading report on other legal and regulatory requirements. So all the requirements which are there in 143.3 are to be stated here. Like we have sought and except for the matters described in basis for qualified opinion, we have obtained all the information which to the best of our knowledge and belief are necessary. Okay. So all these things, that balance sheet, statement of P&L, cash flow are in agreement with books of accounts. Okay. And Caro reporting is also done here. Separate annexure has been made for Caro 2020 reporting, but it forms uh, part of report on other legal and regulatory requirements. Yes, Paranjali, if you want to ask again something of EOM and other matter paragraph, you can ask on Zoom later when we will unmute you guys in last 15-20 minutes. So Caro 2020, guys, I think you already know about Caro 2020, company's auditor report order. And except for the yes, you are asking, please give an example of what type of question can come from 143.3. Yes, any question can be made. Uh, like say uh, say a small case situation can be made in which options are given that which of the following requirement is not there in 143.3. Okay, wherein three requirements are from 143.3 and one is odd one out. Okay. Like there was some question on audit trail. specific question on audit trail. What is the requirement? What is the reporting responsibility of auditor in respect of audit trail? Okay. So there is no term internal financial reporting. It is the term is internal financial controls. It means the controls, internal controls over financial reporting. And these are this is not applicable to a private company, which is a OPC, small company, and companies having turnover of less than 50 crores and having aggregate borrowings of less than threshold limits. Okay. So Caro 2020, guys, you are already aware of. So it is a order which has been issued by central government under section 143 of the Companies Act, to be precise under 143(11) of the Companies Act. Okay, and it contains different matters for which reporting is to be made by the auditor. So it has got some 2022 clauses. So you have to remember all the requirements. One question usually comes from Caro 2020. Okay. So Caro 2020 is applicable to all companies except these exceptions, except a banking company, insurance company, an OPC, one person company, section 8 companies, not for profit companies, and private limited companies meeting certain requirements of turnover and paid up capital and reserves. Otherwise, it is applicable to private companies also. If a private company doesn't meet these requirements, then it is applicable to private companies also. So all the requirements of Caro 2020 you have to remember, students. All clauses, these are clauses. So all clauses you have to remember. What is a requirement? A 4-mark question is most likely from this area. It is generally coming. Okay. So you have to remember all clauses, and you have to see what are the, you have to remember what is the reporting responsibility of auditor under which clause. It can come in case study also. It can come in a descriptive type also. It can come in MCQ also. Any type of question can come. So first clause, quickly we gain an overview of some important clauses of Caro 2020. So before we gain an overview, guys, I will show you the order issued by the ministry, the text of order which is issued by the ministry. So this is the text of order which is issued by Ministry of Corporate Affairs, New Delhi, 25th February 2020. That is why it is called Caro 2020. So this order is called Companies Auditors Report Order. Companies Auditors Report Order. All the exemptions are stated at the beginning of order. You have to keep in mind and remember these, that Caro 2020 is not applicable to such entities. So sometimes question also comes on applicability, not applicability on these companies. So sometimes it happens that we have remembered all the clauses, but when we have forgotten to do applicability portion. So you have to remember the applicability also, and you have to remember the clauses also, all clauses by heart. It would take at least 2 days for you as a fresher to remember all the clauses. Go on repeating, keep on repeating in your mind until you remember all the clauses. Remember what is written in a particular clause, because this is a law question, and you would be given marks, you would be given credit only for the correct law points stated by you. Okay. So it states that auditor's report contains auditor's comments on these matters. So auditor has to give comment on these matters. In under Caro 2020, the auditor has to give a comment on these matters. Now you in your module also the same points are there. So I am reading it from text. So like first clause is whether the it pertains to PPE items. Okay. Whether the company is maintaining proper records showing full particulars, including quantitative details and situation of PP items. So basically you have to comment whether the company has got records. It is maintaining records which shows where the PP items are located, how many number of these items are, and their particulars. Okay. So whether these items have been verified by the management at reasonable intervals. So again, remember that physical verification is responsibility of management. The auditor has to just state whether these have been physically verified by management and whether any material discrepancies were noticed on such verification. So the auditor would give comment. So similarly, whether all title deeds of immovable properties have been held. If these have not been held, then information has to be given in this table. So this is a law requirement, you can't change. So similarly, in exam, you have to state this point as it is. You would be most likely asked on one point or on part of one point. So try to remember all the clauses. Okay. Like second point pertains to inventories. Now here the auditor has to state whether physical verification of inventory has been conducted at reasonable intervals by management, and whether in the opinion of auditor the coverage and procedure is appropriate, and whether any discrepancies of 10% or more in aggregate for each class of inventory were noticed. So the auditor has to state if there was differences on physical verification of inventories as compared to records. If these differences are 10% or more for each class of inventories, means if under raw material these are 10% or more, these have to be stated. Under WIP or finished goods, these are 10% or more, then these have to be stated. Okay. So again, there are certain requirements relating to some statements which we call normally as stock statements, which are required to be submitted to bankers. So where the company has gained some has been sanctioned some working capital credit facilities, so the auditor has to give comment on this. So on similar lines, students, like there are comments on whether the company is regular in depositing undisputed statutory dues like income tax, like TDS, like GST. If not, the extent of arrears which are outstanding for more than 6 months as on the date of balance sheet. Okay. Whether the company has defaulted in repayment of loans or borrowings to any lender. So if default is there, then there is separate information has to be given in this form. So many time questions have come on one clause or part of one clause of 4 marks or of 3 marks. So there is a good probability that question would come in the exam from this area. Okay. Now in this clause number 9, also there are many sub clauses A, B, C, D, like whether the company is declared a willful defaulter by bank. So the auditor has simply to state that this is not applicable, or if the company has been declared willful defaulter, then he would make a comment, yes, it is declared a willful defaulter. Okay. Whether term loans were applied for the purpose for which loans were sanctioned, amount of loans so diverted, and the purpose for which it may be used may be reported. Like, say the company has got a term loan from for bank, say for purchase of machinery. So whether this loan was used in fact for purchase of machinery, or whether the funds have been diverted. Okay. Yes, Ronak, you are asking to explain clause 16. Yes, clause 16 pertains to non-banking finance companies. The finance companies which are doing business similar to the banks, like they are advancing loans, but they cannot accept deposits from the public. Okay. So these are called NBFCs. So there are requirement on NBFCs. And point number 19, on the basis of financial ratios, yes, the auditors have to state that if on the basis of financial ratios, remember chapter 5, that company has to declare, has to state the financial ratios. And this is directly related with the going concern. Financial indicators, conditions, remember chapter 7. So whether the financial ratios explain that, show that no material uncertainty exists as on the date of audit report, and company would be able to pay its liabilities within a period of 1 year from the balance sheet date. Okay. So such kind of things are there. This point is in respect of consolidated financial statements. Now, when consolidated financial statements have to be prepared, then this is applicable. How this is to be, how qualifications of other auditors, component auditors, are to be treated. Okay. Yes, Paranjali, you are asking, can you explain statutory dues? Statutory dues are dues which are payable by a company with under a law, say GST liability, say income tax dues, say TDS. Okay. So this clause undisputed means in respect of which there is no dispute. These are required to be paid. So if these are in arrear as on the date of balance sheet for more than 6 months from which they became due, these are to be reported. Similarly, in respect of dues, there are two parts of this clause, and in second part there are dues where statutory dues referred to in subclause A have not been deposited on account of dispute. Now, if there are some statutory dues, but the company has gone into appeal, okay, then you have to state that what is the amount involved, and where dispute is pending. Say appeal is pending at the CIT appeals level, or the appeal is pending at ITAT level or in some high court, or it has gone to Supreme Court. Okay. So Paranjali, I have already explained clause 7. Yes, Ashok ji, Nisarg, sorry. Yes, Nisarg, you can unmute now if somebody wants to ask question. Yes. Yes, guys, if you want to ask some question, you can raise your hand on Zoom and ask the question. No, no, Shambhavi, you are saying if mistakes are made while preparing the audit report, how to correct them? No. Once you have issued the audit report, um, and there are mistakes in it, it means that your audit quality is very poor, that you have not performed the work in accordance with standards on auditing. These can't be corrected. Yes. Yes, students. Yes, Ronak, you are saying that pervasive in Hindi. परवेसिव इन हिंदी, परवेसिव का मतलब है जो कि किसी एक चीज को उसका इफेक्ट किसी एक चीज तक सीमित ना हो, कई चीजों तक सीमित हो। जैसे कि मैंने आपको एग्जांपल दिया कि सेल्स में मिसस्टेटमेंट है, तो सेल्स में मिसस्टेटमेंट से उसका क्या डेटर पे भी इफेक्ट पड़ रहा है, क्या उसका इन्वेंट्रीज पे इफेक्ट पड़ रहा है, सेल्स में मिसस्टेटमेंट है तो प्रॉफिट में भी मिसस्टेटमेंट होगी, तो कई चीजों पे उसका इफेक्ट पड़ रहा है, वो परवेसिव है। और हो सकता है कोई आइटम एक चीज तक कन्फाइंड हो फिर भी परवेसिव हो, क्योंकि वो उसका पार्ट बहुत बड़ा है। जैसे सपोज डेटर्स ही टोटल एसेट्स का 60% है, तो अगर डेटर्स में मिस्टेक है तो वो, अगर डेटर्स तक भी सीमित है फिर भी वो परवेसिव है, क्योंकि वो सब्सटेंशियल पार्ट है। ओके। या कोई ऐसी चीज है जो कि डिस्क्लोजर्स ऐसे हैं जो कि यूजर्स की अंडरस्टैंडिंग पे इफेक्ट डालते हैं, वो भी परवेसिव है। तो आपको समझ में आ गई? Yes, Paranjali, you are asking what is the condition for repayment of loan in Caro reporting. We just see repayment of loan. Yes, whether the company has defaulted in repayment of loans. It means the dates on which the company was required to make repayment, the company is not making that repayment. So we say technically that default has occurred. Okay, so when the default has occurred, the auditor, the statutory auditor, has to make a report on the given lines as given in clause 9. Yes, Paranjali, clear है आपको? Anyone else? Yes, students, anyone else? तो ऐसा एक क्वेश्चन कर लेते हैं फिर। ये देखिए, यस, यू आर आस्किंग 0.4 page 8.72. 8.72, what it is in Hindi? 8.72. Point 4. There is no point 4 at 8.72 page. What you are asking? Okay, last point you are asking probably. Okay, okay. So this I have already touched upon. Say if the statutory auditor of a company, if he in the course of performance of his duties, उसको ये लगता है कि कंपनी में कोई फ्रॉड हो रहा है या कोई 1 करोड़ या 1 करोड़ से ऊपर का फ्रॉड कंपनी के ऑफिसर्स या एम्प्लॉयज ने किया है, तो वो उस मैटर को सेंट्रल गवर्नमेंट को रिपोर्ट करेगा। इसका एक प्रॉपर प्रोसीजर है रिपोर्ट करने का, जो कि अभी आपके न्यू सिलेबस में नहीं है, आपके सिलेबस में इतना ही है। तो उसको मिनिस्ट्री को रिपोर्ट करना होता है। ये आप फाइनल में पढ़ेंगे, अभी आपको सिर्फ इस टॉपिक को यहाँ पे टच किया है। और अगर फ्रॉड अमाउंट जो है 1 करोड़ से कम का है, तो उसको खाली बोर्ड को रिपोर्ट करना है या ऑडिट कमेटी को, अगर कंपनी में ऑडिट कमेटी है तो आपको इसमें थ्रेशोल्ड लिमिट याद रखनी है कि 1 करोड़ से ऊपर का फ्रॉड है, 1 करोड़ या 1 करोड़ से ऊपर का फ्रॉड, तो सेंट्रल गवर्नमेंट को रिपोर्ट करना है। सेंट्रल गवर्नमेंट में किसको? एमसीए को। ओके। और अगर 1 करोड़ से नीचे का फ्रॉड है तो बोर्ड ऑफ डायरेक्टर्स या ऑडिट कमेटी को। यस, इज इट क्लियर? यस, एनीवन एल्स? Now do this question, guys. Test your understanding 4. Try your hand at this. Yes, what should be the answer to this question? Yes, students, anyone? So students, CA Jamini in this case is not correct. Her view is not proper, because as per SA 600, the principal auditor, he can always ask the branch auditor to share with the principal auditor summary of audit procedures and findings in respect of accounts of branches. She should not feel that it is an encroachment of her rights, encroachment of her domain. Okay. So it pertains to SA 600. Using work of another auditor. Yes. Okay, guys. So any other query, or should we conclude the meeting? If there is any other query, guys, you are free to ask on Zoom, or otherwise I am closing the meeting. So no query. Okay, guys. So thank you. Thanks a lot for listening patiently, and we'll meet some other day. Thank you. Good night.